Yo, what's good, everybody? It's 7:30 right now. I think 10:30 New York time. We're about to hop on, do a quick trade recap of the trade I just took. It was a break even pretty much. So without further ado, just hop on. I think it was a really interesting day to learn some lessons. So let's just get it. All right, so we're kind of looking at how the day panned out right here. This was a pretty nice trade in my opinion, but we're just gonna go over some logistics, how I took it, all that kind of stuff, right? So on the bigger time frame, we looked pretty bullish, but we had this SMT put in, and it was very clear that NQ did not want to take this level on open, right? NQ did not want to take that level on open. So on open, we had the SMT giving us a little bit of bearish confluence. Right when we open the market, we see both prices dip down, right? And this is kind of like, it's looking like a sell model, right? We have bigger time from SMT right here. If we zoom out a little bit, right on, where are we? 1 minute. So yeah, if we zoom out a little bit here, this is looking like a pretty nice sell. So we start to see displacement into open. So you guys know the playbook is literally just watch for internal manipulation and trade the rest of the model till it's done. So on open, we start to see NQ push a little higher. ES is still kind of lacking in the range. And then ES takes London low. And then from there, NQ literally just rockets off, bro. So I'm like, all right, yeah, I'm not trading a short. Like nothing really looks good to me until a little bit later in the day, right? We see some manipulation in, and then right back in this fair value gap right here, 5-minute fair value gap. We see SMTs at highs because look how bullish we are here. Bigger time from SMT is off, but still the other SMTs are still kind of playing there. So watching price, right? And then we end up seeing manipulation, displacement through inverse fair value gap right here. Price looks pretty good. I take a short, I get tapped in for pretty much zero drawdown entry right here. Price starts to displace, and then this is how I took the trade. I took the trade with my entry at the chaining of the state, stop at this high, and then I look to take the profit all the way to here. I want to talk about why this costed me about like a potential $1,000 and it only made about $190, right? So at the situation, this is a very standard way to take this trade, right? Kind of here, let's clean this up a little bit so we don't look at all this BS. This is a very standard way to take the trade. Yeah, fair value gap, SMT, right? We have fair value gap, SMT, displacement, change in the state, mark that out right here, change in the state, inverse fair value gap right here. I think I have one for that. But yeah, right? A very standard way to take this up. And what I mean by that is stop placement and take profit, right? It's very standard. It's like we're going to catch the whole move, price is going to go. This is what you want to do for like 99% of your trades. But in a circumstance like this, the better way to do this would have been to at least secure some kind of profit, maybe even full profit right here. But then RR diminishes so much, it's not even worth it to take the trade. So you can maybe even lower your stops right here. And this would have been the best way to take the trade today. The reason that I say this is the best way is number one, we have to look at our take profit rate. We're targeting the rest of this because in terms of this model, this makes sense, right? Buy curve, sell curve over here. In terms of this model, this starts to make a lot of sense. This is a very standard, perfect way to take this trade, right? Looks really good to go ahead and take the trade to there. And like that's kind of like how you trade most of the time. It's how you trade your model, expecting to see price follow through all the way to this level, right? But when you start to zoom out, you get a little more info. We have an SMT at London low. What does an SMT actually tell us in logic? This is kind of one of those moments where you start to put concepts together with real charting logic, right? SMTs tell us that there was more liquidity and it was more efficient and worth it for ES to push lower and take this low, whereas on NQ, it wasn't worth it for NQ to go take that low, so it didn't, right? So typically, when we see SMTs, that's why people say this is the protected low, right? Because at that point, that's kind of like, when they say it's the protected low, it's because there's no more liquidity left for it to take, right? If it made sense for it to go take it one time, it bounced so strongly, it makes more sense for price to go ahead and not go back to that level, right? Because just think about it, right? If that was efficient one time and we made an SMT there, it shows that NQ didn't want to go to that level. ES did. It's a protected level, right? We're most likely not going to go back there. So that is the first reason that you most likely don't want to target London low unless ES wants to flush for the rest of the day. We already took London low. We could want to later in the session roll over to Asia low if price decides to reverse. But for right now, it looks like we don't really want to take any of these lows, right? It looks like we're probably going to play around the day. Maybe look a little bit bullish. Do all that, right? That's the first reason for take profit. Second reason is think of this in terms of a buy model. This is one of those 50-50 days of price action that I talk about where if you can't look at the chart within 10 seconds, right? And you can't tell direction. Like right now, I can make cases for bearish and bullish, right? You can kind of tell the direction in 10 seconds, right? But if you go back through it and you kind of count, right? If within 10 seconds, you can't come to a very clear bias where there's no opposing arguments, it's most likely going to be 50-50 price action. It's better to just step away. Like right now, I have bearishness marked out, right? But I can choose and I can delete this SMT. I can say, okay, look, we have change in the state. We had a huge displacement right here. Fair value gaps opened up. Maybe this was turtle soup and now we go higher, right? You can make that case. So it's best to look at the market. That's why we can't trade our idea. We can't just say, this looks like a clean short, this is the best short ever, and care so much about our idea, because that's when we get burnt. We don't look at price from both sides of the market. I'm just trading the chart. I'm trading the reality of the chart, right? So I'm understanding, right, this could be bullish. No one's saying it's not or bullish, right? I'm just taking the short because right now, price is showing me that the drawn liquidity, after I see this displacement, price is showing me the drawn liquidity is lower. I'm not sure where it is to, but I'm pretty sure it's going to be lower, at least to take this internal low. So that's why I'm trading that. So I take that trade, right? And understanding that this could have been turtle soup is the best way to take this, right? Understanding we probably don't want to go to London low, best way to take this. And stop placement wise, I used to be very, very firm on my stop placement, right? I was always like, place the stop at the SMT high, that's the protected high, which is 100% true. But in a situation like this, right? Say you want to risk 500 per trade and you're risking 1.45 R. If you take a stop that is 5 points, right? Lower to 3.5 points. Instead of risking 500, just risk 350, and you're gonna manage risk a little bit better. And then this area of price is something that price could go back to, right? And then it could go like this. Like 100% price could do this, could go all the way up and then push lower. 100% it could, but at that point, 99% of the time, once we get past that level of price, that's when we're most likely gonna get stopped out. Or if price is already going there within seconds of me starting to trade, right? That's like telling me this model is most likely going to be inefficient. It's not something that I want to trade too much, right? So those two things, and understanding that like if you're getting mad because your stop placement is getting you stopped out, most likely stop placement is not the thing you need to worry about. Most likely it's going to be your drawn liquidity. It's going to be your actual ability to read price action. It's going to be all that kind of stuff, right? So the best way to take this trade would have been stop right here, take profits here, and just looking for that scalp move. RR becomes the same, 2.07 becomes the exact same as taking this trade, but it's higher probability. It's more of a scalp, right? And you know, I think this is like one of those examples where, as well, understanding like the conditions of the market, right? I was able to get out and make a little bit of bread, but it's like good to look at this and understand like we're so much higher, we're so much lower. Or like we're so much higher here and we're doing nothing here. So it's telling me like price probably doesn't want to move a whole lot, right? It's not like SMTs, it's like we're just playing around in the range until someone's getting stopped out, someone's feelings are getting hurt, and someone's getting taught bad habits because they're trading this, right? So it's up to us to literally just sit out and do nothing. So I think that's the biggest thing for the day. And the way I managed this, right, was once we took that internal low, I did go break even, but I ended up taking off price. You can see the arrow here. I didn't end up taking off price at this high, or at this inverse right here. So I only made about 190, which is pretty sad. I risked 500 on this. So, I mean, overall, interesting day to look at price, really dissect some action. I think the lessons on like the model's dynamics and stuff, I think that was pretty interesting for me. Kind of opened my eyes to, you know, understanding price, understanding positions, more of that kind of stuff, right? A lot of times it's like we can always predict, you can always predict price moves, but it's the execution is usually where people make mistakes. So I think this is a good example to look at execution and learn from it. So overall, W day, and thank you guys for hopping on. I hope you guys learned something. So peace out.